Hi guys, welcome back on the RCA channel. In today's video, we discuss the another topic of the paper number 5, chapter number 2 of the financial account, that is joint venture. Before starting the video, please download the notes. Link of that notes given in the description box, and it will help you in the preparation of the joint venture from the practical aspect also, because in these notes I also cover the practical aspect of the joint venture. Basically following things are covered under this video. That things is need an introduction of the joint venture, features and characteristic of the joint venture versus consignment, joint venture versus partnership, and method of the accounting under the joint venture. All this part we discuss in this video. We are also active on the Telegram group. Please join us on Telegram group. To get our Telegram group link, please WhatsApp us on a number given in the description box. If you send message on WhatsApp, you will get link of our Telegram group within the second. And guys, also do one thing, please subscribe our channel so can I motivate to prepare new videos for you and new concept based videos for you. And also guys, if you need any conceptual lecture on any topic of the paper number 5 or paper number 12 of the CMA intermediate examination, please comment in comment section. I try to provide that also for you. So guys, I hope you download the notes. Let's begin the needs and introduction of the joint venture account. So guys, what is the need of the joint venture? You think that why I focusing on the theoretical aspect of the practical chapter? See guys, because there is chances to ask the question on the theoretical aspect of the practical chapter in the examination, because we prepare for the professional exam, and in professional exam there is nothing useless. So guys, when we studied the any chapter, any practical chapter, we cannot do the theory aspect of that chapter. Because of this, we are unable to answering the question of the theoretical aspect of such question asked in the examination. That question basically asked in the question number 8 or any bit of the question number 2 to 7. So guys, I recommended you please do theory part of practical chapter also, because this is also game changer to us. Game changer to us in the sense that if suppose we don't tackle any practical question into examination, and if we tackle the any practical question into examination but that is wrong, and we tackle the theoretical question ask on the any chapter into examination, then in such case, if any practical question is wrong from my side, this theoretical question is safeguard for me. And if I appear this theoretical question into examination, then there will be chances to passing into examination will also be increased. So guys, I personally recommend you, when I do my intermediate or final, I also do the theory aspect of the all practical chapter, and I got very conceptual clarity after doing this pattern of the study. And I also recommended you also do this pattern of the study, because without concept we don't have any opportunity in the market. So guys, if you want to be a perfect cost accountant or perfect chartered accountant or perfect company secretary or perfect professional after qualifying the degree, so guys, I recommended you please go through the concept. Without concept there is no opportunity to us, there is no chances to job or no chances to will practice into market. So guys, let's start the video. Why there is need an introduction of the joint venture account? Because guys, when very huge contract are received by the any entity, or very huge product are received by the entity for the complying the work, in such case single entity will not able to done all work from their side. Due to this, there is a need of the one or more business organization to complete that work. Say for example, Mumbai Metro construction work are done by the Mumbai Metro 1 Private Limited, that is the joint venture between the Reliance Infrastructure, MMRDA, that is Mumbai Metropolitan Region Development Authority, and Velour Transport RATP Asia France. This is three companies which come together for the construction of the Mumbai Metro. So guys, think that Reliance contain the 69% of the share, and MMRDA contain 26%, and Velour Transport contain 5% of the share. So this is the 100% share of such work. So guys, joint venture is a basically business entity which have no name or which has been established for the completing a certain work, like a if the construction of the metro station or metro infrastructure into the Mumbai city. After completing this project, these joint venture companies are dissolved. So guys, once the work completed under the joint venture, then that business entity will be dissolved. So guys, this is a basically very short term of the business entity which established for the purpose of the completing the any project or any contract. So guys, once contract or project is completed, joint venture will be dissolved. So this is the needs of the joint venture into business scenario, because there is also like construction of the railway bridge into sea, construction of the railway bridge between the two mountain, construction of the dams onto river, construction of the various infrastructure facility into the India. So guys, this is a very big or huge project or contract that will not be completed by any single entity. In such case, there is need to be come together one or more entity and do that work together. This is the objective of the joint venture. So guys, next, under understanding the need or introduction of the joint venture, from this discussion we conclude that there is a agreement between the two or more person, as we earlier discussed. Next, joint venture is made for the specific execution of the business plan or project that we already discussed. If Mumbai Metro infrastructure is completely done, then all business, all parties to such joint venture will dissolve, and account of that co-ventures are settled when the joint venture will dissolve. So next is, it is a temporary partnership without the use of the firm name. This is already discussed. Next, agreement of the joint venture is automatically dissolved as soon as specified project is over. This is already we discussed. Next is, profit are share on the same term and condition agreed upon. So guys, next is, however, in the absence of the any agreement, profit and loss will be shared equally. Next is, the account of the co-venturer are settled immediately on dissolution. This is already we done. Next is, the co-venturer may or may not contribute initial capital. So guys, after understanding the needs and introduction and conclusion of such concept, we can now discuss the joint venture versus consignment. This is basically difference between the joint venture and consignment. So there is a 5 point that is the difference, that is laid down the difference between the joint venture and consignment. That point is relationship, profit sharing, ownership, fund contribution, continuity of the business. So guys, we can discuss one by one. In relationship, joint venture, co-venturer are the joint venture are the owner of the joint venture. So guys, next is, in consignment, consignor is a principal and consignee is an agent. So in joint venture, all co-venturer of such joint venture are owner of the joint venture, and in consignment, consignor is a principal and consignee is an agent. Next, profit sharing ratio. In joint venture, co-venturers are share profit in the respect to profit sharing ratio, and in consignment there is no profit sharing between the consignor and consignee, because there is a prime relationship between the consignee and consignor is agent and principal. So guys, next is ownership. All co-venturer are co-owner of the goods and property held under such joint venture. Next, ownership of the goods remain with the consignor, only possession of the goods are transferred from the consignor to consignee. Next, fund contribution. So under the joint venture, fund contributed by the all co-venturers, and under the consignment, fund contributed only by the consignor. So guys, next difference is continuity of the business. Joint venture is a temporary and consignment is a continuous process. If the relationship between the consignor, that is principal and agent, is go smooth. So guys, next distinction between is joint venture versus partnership. So under joint venture, firm name is not required, but under partnership, firm name is required. Next, person who agreed to take the project or contract is called a co-venturer. We can already discuss this into need of the joint venture, that is Reliance, MMRDA and Voila Transport are co-venturer of the project of the metro infrastructure development into the Mumbai city. So next is, person who run the business is called as partner. Next, joint venture. It is constituted for the completing the particular project or contract, or partnership, it is a constituted for the long period. Next is joint venture. There is not any enactment for the joint venture. Next, partnership are enacted under the Partnership Act 1932. Next is joint venture. No specific limit of the co-venturer are specify in case of the joint venture. In partnership, we know that the 10 is a maximum limit for the banking business and 20 is a maximum limit for the other than banking business. So guys, next is joint venture. Liability is restricted to the particular project or contract that is carried out under the joint venture, and in partnership, liability is unlimited and it may extend to the personal property of partner also. So this is the distinction between the joint venture and consignment. Now we discuss about the method of the accounting under the joint venture. So there is a basically 3 accounting method which are which has to be maintained under the joint venture, we can understand one by one. So first of all, where is a separate book of account is kept. In such case, there is a 3 account will be open. That account will joint venture account, joint bank account, and co-venturers account. Next category is where separate book of account are not kept. In such case, each co-venturer maintain the complete record of the all transaction, and second category in that category is each co-venturer maintain a record of only his own transaction. This is also called as a complete record method versus partial record method. So in complete record method, joint venture account and account of the co-owner will be open, and in case of the partial record, joint venture with account, so joint venture with the consignee account and memorandum of the joint venture account are open. So this all account we can understand one by one in upcoming video. So guys, our first category is where separate set of the book is kept. In this we open the 3 account. First of them is joint venture account. In this account, following item are appearing on the debit side of this account. All expenses incurred by the co-venturer are appear on the debit side of the joint venture account. And next is all expenses out of the joint bank are also appear on the debit side of the joint venture account. Next is all expenses irrespective of its nature. All expenses means in respective of its nature, because in joint venture we also record the capital receipt and capital expenses required for such joint venture project or joint venture contract. So guys, next is following item are appearing on the credit side of this account. That major item is sale proceeds to outsider or to co-venturer. So guys, when project is completed or when contract is completed, in such case asset hold under the joint venture account will be sale or sold to the outsider or co-venturer of such business. So guys, balancing figure on the joint venture account transfer to the co-venturer account in their profit sharing ratio. So guys, next account is joint bank account. Basically this is a cash book of the joint venture account. All receipts are recorded on the debit side and all payment are recorded on the credit side. Final settlement of the co-venturer account are lastly put into this account so that it is tallies. So guys, joint venture account is always tallied. Next is co-venturer account. This is the last account open where the separate book of account is kept. That account is co-venturer account. It is like the capital account in the partnership business and is open in the multi-columnar form to record the transaction of the individual venture. Next is where separate set of the book is not kept. In such case, 2 accounts were mainly open, and first of this account is joint venture account, which is already we have discussed. And so guys, another account is co-venturer account. Following item are appearing on the debit side of this account. All transaction appear on the credit side of the joint venture. So guys, suppose there is 3 co-venturer, then there is 3 co-venturers account will be open, first, second and third, and respective transaction which is debited and credited to the joint venture account will appear in this account on the opposite side. So guys, this is a personal account and this appear the transaction or expenses incurred by the joint venturer and which is recorded in the joint venture account, and opposite effect of the joint ventures account are considered in this account. So guys, next is where partial record of the account is maintained. So guys, for understanding this we can take an example. So suppose there is A and B decide to work on the joint venture. In this case, if we prepare the joint venture account with the B in the book of A and memorandum joint venture account in the book of A, in such case joint venture account with the B contain the following expenses or following items. That is, we prepare the joint venture account in the book of the A. In this we record all purchases made by the A and all expenses incurred by the A are recorded on the debit side of this account. All receipt of the A and all sale occurred by the A will be appear on the credit side of this account. So guys, because we prepare the joint venture account with B in the book of A, in this case we prepare the account in the book of A, hence we consider only the expenses of the A, not the expenses of the B. So guys, next is memorandum joint venture account. Continuing by the taking previous example, we prepare the memorandum joint venture account in the book of A. In this we record all purchase made by the A and B on the debit side. Guys, this is basically joint venture account, and guys, this is a memorandum joint venture account, so it is not considered as a part and parcel of the book of account. So it is only statement which present or which represent the expenses and purchases incurred by the co-venturers and all sales and received by the co-venturer. It is similar with the joint venture account. So guys, here we finish the theoretical aspect of the joint venture. So guys, now please share this video with your friend, and we are also under process to making the videos on the trick of the solving question of the bill of exchange, consignment and joint venture, which deliver soon on the YouTube. So please connect with us on YouTube and also share this video with your friend. So guys, stay at home, stay safe. Thank you for the watching video.